And I'm saying hi to those who's watching at home or in South Africa. Hey, Peter! Come on, please join us. And welcome to you guys who join us here. Thank you for coming. Today, Gary is a bit ill, so he couldn't come. So sending prayers for him. Gary, we love you. So today in this episode 21, we will have special guests. We have Max Wright here. Anyone? Nice. So Max, maybe you will introduce yourself a bit later, right?
Sure.
Thank you.
He's a Bitcoin gold.
Yeah. Well, he's the author.
I'll take the compliment.
Yeah. All right, and then we also broadcast this live from Google Hangout on air, also on YouTube. And our friends in South Africa, Peter, he's gonna feed the links live for you guys, and we're gonna administer the questions through our Facebook page. Could we go to our Facebook page? We could share first.
Let's hit the share.
Yeah.
You hit the share.
How do you?
Do you want to stretch it?
People. No, I want to make it bigger. There you go. And then,
bigger?
Yeah.
Bigger?
Where's
Is it big enough? How big do you want it?
Where's the share for the
Screen
share? There you go. The green one.
Green
Yeah, I'm
sharing.
sorry. I'm
Screen
pro for Windows.
sharing. Which one is it?
The below one.
Screen 2. This one?
You're on bottom left, aren't you?
Bottom left?
This
Okay.
one. This one. Yeah.
Okay. Bottom
And then
left.
share. Click share. Yeah.
Just double check.
There you are.
Okay, we are.
Then let's just.
Alright, here we go.
There you are.
Here's Peter.
Don't know what.
Okay, bye Peter.
Bye, Peter. Hello, welcome. All right. So we have Bitcoins in Bali. Every week we will have you guys, if you want to post any articles about Bitcoins or others, other alternative coins, whatever, any news about it, just post it. Feel free to post it over there. And yeah, we're just gonna,
Chats, yeah.
Oh, we have a chat here.
Yeah, if anyone wants to jump on and ask questions during the podcast.
Oh, true.
Just,
that will be here. If anyone who wants to pose a question about today's filter, please share your question into the comment section over there.
Comments and go.
Yeah,
questions.
to say questions here.
Go.
Exactly.
Yeah.
Yes, perfect.
And if Peter's doing his job over in South Africa, he'll be posting some of the links that are going up live here.
Yeah.
As we go.
All right. Okay, so before we start, maybe we should go for the Bitcoin price today. So what's going on with the price today? Oh, maybe, hold on a second. I forgot. Sorry, guys. This is new for me. And normally, I'm like the back girl, like on the backstage. Now I have to be the girl on stage, and it's just like crazy. All right, it's good news. Oh, God, I hate you. So this is Bitcoin 101. We have every month. We did last month, and we have some of the people already joining us tonight. So Bitcoin 101 will be held in Saturday, October 11th, 2014, which is next month. And then the following next week will be, where is it? Will be Bitcoin 101 in Bahasa. So anyone who knows friends or colleagues who wants to know more or who wants to set up Bitcoins, you guys are free to come, and we will, help you out to understand a little bit about Bitcoin. And then in the end of the day, you will go home with knowledge and also a little bit of Bitcoins in your wallet. Right? Let's go to the price. God.
Holy
Really?
shit! It dropped
I know.
$4 in 1 hour.
Wait, look. I mean, are you guys shocked? I am shocked. I'm shocked a little bit. I mean, last week it was like 470 something, right? And now it's like 397.
Ourselves?
Okay, are you guys? I mean, this is an open question. Are you guys gonna sell it or are you guys gonna hold on to it?
Or buy more.
Oh, you're gonna buy all.
I said, or buy more.
Oh, or buy more. Oh yeah, 3 options. Yes,
The problem
yes.
finding them all is who's going to sell them now.
Nobody.
There's always sellers.
Consider sell.
Okay, some people are gonna sell it, some people are gonna hold it, or maybe people, you know, they're just like, well, it's cheaper now. Why not? Why not? I just buy more. You know, you never know. All right, and then the next is the maybe you can.
Don't be waiting for the price yet. Willie, want
Oh
to speculate?
yeah.
What's driving?
Oh, well, I was going to check on the end, but let's chuck it forward.
We're saving it for the
It's-
end, right?
No, no. I knew if it came up, we would just bring it in. We'll just bring it in. Here we go. So you can see that it sort of took a dive this 14-day price. Took a dive. Actually, I bought some here.
Me too.
Me
Yeah.
too.
Yeah, of course you would, because if you look at this graph here, it was hitting this sort of longer term support, right? And that's a good, it's a good area where you think it might bounce off. But what happened was it went lower, as you can see, and there's a lot of positive news in the press and whatnot, but the reality is the short-term pricing doesn't really reflect the news. It tends to reflect trading patterns. And what happened here was the price just went through a long-term support. Like this was the last area in which we saw support. It bounced off that. That's where traders go, yep, at that price I'm going to buy. If you look back, this was another area that it had a lot of support and it bounced the price up. So yeah, what happened? Let's go back in. Yeah, it fell through that, and so what happened was the pricing went back in time, and you could see there was support there and there. So we're just hovering on for dear life here at the 400 range, and I don't know about you guys, but I'm ready to sell if it drops below that support, because the reason I'm going to do that is because I know the next level of support is at 300, shown here. So if I sell there, I can pick up at a bargain there, and then if that falls through, then the 200 is shown to be a very strong support area. There's been articles written how Mt. Gox, there were people buying at 200 even though they didn't know if they'd get their money back out of that exchange. It's a very fundamentally strong support area. So right now, if whatever happens in the next few weeks, if it doesn't get support and it falls through, it can fall through quite heavily. Yeah, and this is sort of the short-term support. It's rising.
Do we have any idea what happened?
It fell through.
Why did that
Was it something we said?
There was no news base. Like, there wasn't like a Gox incident or anything like that.
accident?
There was no. Pretend that's a real word. Yeah, there's no real significant event that drove it. It was just technicals and it just fell.
Don't try to attach any kind of news to short-term pricing variations unless an exchange gets hacked. Something urgent, super urgent, that impacts the price now in the next 5 minutes, 10 minutes, an hour, that's going to impact this price. But like, PayPal going to accept Bitcoin, that's going to affect the price over the next 6 months to a year. So, yeah.
Play the wild speculation game. So, perfect storm of events. We've got Apple Pay coming out. We've got the Alibaba IPO. People liquidated with Alibaba IPO. We've got gold up, right?
Yeah.
Got Isle of Man. Not Isle of Man. Is it Isle of
We
Man?
had Scotland.
No. No, who is it just backed out of, the banks backed out of all the Bitcoin contracts?
That was Isle of Man.
It was Isle of Man. We got the Isle of Man news, which affected the European trading market. I mean, sort of a perfect storm of minor factors that perhaps are having an impact. I'm just speculating here.
Yeah, for sure.
I mean, let's face it. Like we were seeing it, what, 697 less than 4 weeks ago, right?
I was going to throw on top of this. We have leverage trading now with Bitfinex. We have people who can short Bitcoin by borrowing Bitcoin, selling those borrowed coins and buying back on the market. And so the volatility and the power to drive down Bitcoin is much more amplified now. And we saw the bottom drop out a few weeks back here, down to here. And a lot of sort of theories that this was because the margin, but the money that was borrowed to short Bitcoin, what was it? It was margin trading anyway, and it caused a plummet. I can't remember the details of it, but it caused a plummet, and they thought it was margin trading. So this is getting much more like Wall Street sort of alternative markets, derivative markets, where you get a lot of volatility based on speculation. You know, that's my take on it anyway. Shall we move on?
Yeah.
Any more questions or discussion points? Should we check our Facebook?
I'm checking it out. Nothing yet.
Nothing? Okay. All right. Moving on to
the arbitrage.
Bitcoin Indonesia.
God. Yeah, it's very expensive here.
5% above normal, which is absolutely opposite to what it's been a few months ago. Which means it's great, you know, if we go down to Clear Cafe, we get a 5% discount because they convert on the fly to fiat currency.
Yeah.
Yeah, so trade exchange there. Prices going in the other exchanges. Should we move on? Okay, this is, what is this? M1, is this the, this is the market cap? Cap. So wow, it's dropped $1 billion. Just like that,
It's
7 days.
dropping.
1.5 billion.
Okay, 1.5 billion. Even better, more dramatic. So last week, I think this was number 83.
80, yeah.
Compared to the economies or market caps of other
89.
currencies.
Last week was 89.
Okay.
Dropping 10 scores.
Slipped 10 places. Volatility up at the 6.2%. Is that high, Vinny?
It's very high, yeah.
Very high,
Last
okay.
week was 4.977.
So volatility climbing. We're getting ready for some big price movements. Or we've had some, but yeah, we could see some bigger ones ahead. Yeah. Great for traders, not if you're holding it. So moving on.
Number of the week.
Number of the week. That's my slot, isn't it?
Yeah.
Time out. Can I?
Oh yeah. Back up the
Yeah,
truck.
your
Back up
turn.
the truck.
So
Okay,
we're
right.
down at 400. At what point does mining become, or how many mining operations have suddenly become non-economically viable?
Oh shit.
A bunch.
Yeah, there's some discussion around mining getting more and more centralized because of that.
Yeah, it's time, right? It's time to buy up small miners.
I know a bunch of miners who, like, they were losing money 500, 600. They were planning, they were expecting a price of $1,000 again very shortly, and they spent money on rigs planning for that in their financials, and the price doesn't come up the way they were hoping, and they're just sitting with boxes not getting a return. So yeah, it's affecting miners big time.
Is this gonna assuming this keeps going down a little bit, to get to the point where it kind of doesn't monopolize, but lessens the amount of mining operations we have to the point where there's only a few?
Yeah, that's a great
that's
discussion
okay.
point. Actually, I'm going to talk a little bit more about that later.
We can see that how the amount of miners throttles to the market cap. A few weeks ago it was 400 million of mining hardware to be 50% of the 50%. Yeah, at a 6 point something billion market cap. So I think that's a really good number, that ratio. Yeah.
And we could have a situation where, let's face it, if you're a mining operation and you're very, very tight cash flow, in a situation like this where the prices drop so much, instead of holding coins, you're dumping those coins immediately to try to stay liquid and stay functioning.
So more selling pressure.
Which would drive the price
down.
Yes. We could probably quantify that because it's 25 bitcoins every 10 minutes. Compare that to the market. Yeah, every 10 minutes. And someone could work it out, find out how much that is per day compared to the volume of trade. My hunch is it's probably still minor.
People don't know about PayPal.
Wait, what then?
The PayPal.
The PayPal.
Didn't PayPal go, hey guys, we're doing it?
Yeah. I don't think people know that.
It's a
That's
long
really
term.
big.
Doesn't the market always look ahead? So they already know that, right?
Yeah.
Not many.
I mean, that's old news for them, is it not?
Well,
For
if PayPal come online and there's a lot of merchants that accept Bitcoin, it has a short-term negative impact on Bitcoin because merchants will either keep the Bitcoin, which is neutral, or convert to fiat, like many businesses do, because they need to pay staff. When they convert to fiat, it's a sell pressure on the exchanges. So it's only when we get enough merchants that the long-term effect that people go, oh, I can spend Bitcoin, I've got to buy some Bitcoin, get a wallet, that then drives the price up.
Well, wait a second. If everybody can accept Bitcoin via PayPal, then Bitcoin is going to become ridiculously more viable as a currency.
Yes.
So that'll raise the price, you know?
Well, it only raises the price when everyone says, wow, I could pay by Bitcoin and I need a wallet. And so I've got to buy some Bitcoin and spend using this new cryptocurrency. But that requires, that's a stage 2 after the merchants start firing
So
up.
we need like ability, then realization.
Yeah, so it's down and then up. So it's a long-term effect. Okay, should we be ready for this?
Yeah.
Okay, this is an easy one. What is 20,999,999.9769? Any guesses on that?
Slightly less than 210 million.
No.
I'll give you a clue. It's nearly 21 million.
And 21 million is?
Number of Bitcoin.
Yes.
Yes, that's the number of the week. This is a suggestion by Gary. I was going to now hand it off to Gary to discuss, but he's sick at home, so we're going to have to carry this. So I hope you guys.
Is he watching this from home?
I don't know.
I hope
Maybe.
so.
Hi, Gary.
Unless he's. Are you still alive, Gary?
Gary?
Post in the Facebook chat room. Let us know you're alive. So yeah, I found this this little page, which is the Coinbase graphic. So this is the whole 21 million in this whole circle. It shows you how many were in circulation over time, and we are roughly 2/3 of Bitcoins in circulation.
Wow.
Come next year, we'll be 3/4, so it's filling up quick. And by 2024, that's what? 7/8. And this will take another century, this last bit. So, yeah, nice little. It's Coinbase charts if you guys want to play with that widget. I sort of took a little snapshot of here in a month's time, a year's time, and divided by each other, found that the inflation rate right now is 9.8%, like 9.8% more Bitcoin in the money supply year on year. Then I found this chart here, which describes it on Reddit. No, Bitcoin Talk. So this is the amount of percentage of inflation going into the system. So we're currently at 10%, and that's going to drop to about 5% pretty soon. Where is it?
2016.
Yeah, 2016, there you go. We're going to go to 5% inflation, which is starting to approach what you see in economies, around the 2 to 5. But then, really, it was to bring this conversation over to the denominations, because right now a Bitcoin is a very big number. Who thinks in Bitcoin? Like 0.0. You do?
Yeah.
Wow. Okay, so when you pay at the local cafe, you
I'm
think
like, yeah,
in,
0.05 Bitcoin.
really? Wow, I always go, I hope I got the decimal places right or wrong, because, gee, you know. So, yeah, there's a move to go to 1 Santoshi, which is, what is it, 8 decimal places, is it?
Yeah, it's like
and
1 million.
yeah,
Maybe
10
they should
billion.
put commas on the right side of the stop.
Yeah, I agree. But yeah, they're starting to call this a bit. So
1 bit.
when we talk about spending
10 bit.
1,000th of a Bitcoin, that's 100,000 bits. And I was there's other alternatives that we've been calling it a milli Bitcoin,
I like a million.
Or a millibit.
a micro Bitcoin, a Santoshi. Satoshi. Yeah, that's my bad.
Satoshi.
My bad, yeah. Let's come on, it's an imaginary guy. He won't mind. Or girl.
We should nominate
Or
your
bunch.
name for one of those. I mean, there's open slots.
Yes.
What if we should go with-
Yeah, we should.
How many
Will it
Willys in a Bitcoin?
I have a particular favorite. This is the Bitcoin wiki, and one Satoshi is also known as a Bitcoin bomb.
Bitcoin.
Bitcoin bomb.
Bong.
You know,
I like
yeah.
bong.
The Bitcoin bomb, you know. So yeah, interesting. We've got all this stuff, and I thought I'd just throw up this this new iPhone iOS
wallet.
Weird wallet. It's actually one of the nicer wallets I've used. There's not many on iOS because you know they all got smashed
Wait, so that
a while
means
back.
that Apple's back to letting Bitcoin be a thing.
Yes.
Cool.
Blockchain came up, what, 3-4 weeks ago?
Yeah.
Back on. But this one's really nice to use, and they're using millibits. No, what is it? Bits. So this is 18,000 bits. It's a very nice weird wallet. I've just started using it.
Were you using blockchain before on your
Yeah.
iOS?
Yeah. This
And how
one's
did you compare it?
This one's much slicker to use. I'm just looking at wallets right now because I'm thinking about moving one myself to be easier to use in a payment situation. This one's pretty good. Pretty good.
Well, long time ago, Rick showed us
Green address.
green address, and how is it? Is it
I dig
available
it.
on
It's
iOS?
good. I
Yeah.
don't know if it's fit for iOS.
Do we have Apple guy here? No. Okay.
Like Steve Jobs.
Oh, you're right.
Who's the Apple guy?
Yeah, Steve Jobs then.
Okay.
Well, rest in peace.
He's
But-
listening in from above, I'm sure. Or below. Okay, shall we just look over?
Oh yeah.
Yeah, alright.
Can I-
Over to you to do
Yeah.
the intro.
So, okay, back to me again. We're gonna have our guest speaker, Mr. Max Wright. As you guys know, he wrote a book. What's the book name again?
The Bitcoin Revolution, Ending Tyranny for Fun and Profit.
Yes. Yes, you guys should buy it.
Buy it. sucker.
I wish I could buy it on Amazon, but you know they
Is
don't
it
accept
Bitcoin?
it. No, they don't accept Bitcoin, and it's
yes,
very
they do.
really.
Well, I mean, they don't, but you can use the card.
Snap card?
Snap card.
Yeah.
But if
Okay.
anybody wants to sign up for Snap card, contact me so I can give you an affiliate link so I can make
All right,
money
buddy.
off it, so.
Calm down. Calm down.
Plug it.
True.
Plug it.
True.
That's
Do you
authentic
want to plug your
marketing.
Twitter handle or something?
So yeah. So Max is gonna, share a little bit about his view on Bitcoin, and this is his YouTube channel called Success Council. You can watch a lot of videos that he already uploaded there, and as you know, recently he uploaded 2 videos. The first one is this: the reason the Bitcoin price is not exploding, right? Right. If you see here, my cursor, ding, 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 right there, and then probably 20 hours ago, he uploaded a new one that is basically telling you guys and what's happening with the Bitcoin price. Now we can talk with him, or maybe let's let him share.
Thank you.
Yeah.
Yeah, so just a quick pulse on the room if I could. I just want to know how many people here have Bitcoin? Oh, okay. So there's a lot of. Is there any Bitcoin rookies in here? Like, first meeting?
Oh, that's
Okay.
something.
First meeting? Okay, cool. Okay, in that case, it's okay. We've got a lot of experienced people here. So I'm going to
actually fly through this stuff, which is kind of pull some slides out of my intro talk. So I might go a bit fast for you. My apologies for that, but it seems like the room's quite advanced. So I want to get to the really challenging stuff, and we'll get to that quickly. But so let's go through this stuff quickly. The internet, it makes everything better. Netflix is better than Blockbuster. Google's better than going to the library. Email's better than snail mail. So why has the internet not yet provided us with a vastly superior money? Next slide, please. And there were three big reasons that are holding back that achievement. Because the internet's really good for doing money in so many ways. You know, it's so easy to divide things up as opposed to having small units or whatever. There's lots of things that are good, but there are things that are bad. Those slides are out of order, I think. Let's go to no.
I think there's 6
Nope,
left.
it's not this one.
Oh.
Nope, I think there's one missing. Okay, let's go back to the first one.
This one's on this one.
I'm just gonna have to make it up.
No, it's right here. Yeah, yep. The second one.
Can you show me the second one, please?
There you go. Click.
There you go.
So the three really good reasons that it was so hard to create a digital currency is one, the most powerful and violent force on the planet benefits greatly from the status quo. I'm going to breeze over this. There's a lot of assumed knowledge in this, but if you haven't guessed, the most powerful and violent force on the planet, that's governments. Yes?
Hello, Manu.
Hello.
Right? And they benefit from fiat currency because they have the ability to print more of it, which in effect is a taxation on you, tax via the mechanism of inflation. And they can confiscate wealth from you via inflation. They don't have to ask for your taxes. You don't have to send them a check. They can take everything that you own in terms of your monetary value just via inflation. Sadly, we've seen that in Zimbabwe this last decade. Seems to happen in Argentina every 10 years. Looks like they're ramping up for it again with inflation hitting somewhere between 80 and 100%. And so governments and banks have this ability to take from you as much as they want whenever they want without having to ask your permission via normal income tax and other kinds of taxes. So there's a tremendous benefit there. Now, there have been a number of instances in history where people have tried to get away from this and not subject themselves to the whims of inflation of central bankers and governments. And they've created things like gold-backed currencies. You may have heard of things like Liberty Reserve and e-gold. These were people where you could go and send gold, put it in a vault, and I can have an account. As I've got 700 grams of gold, you can go and get an account, and I can pay for whatever your goods or services with that gold. And I can say pay from my account to your account, 1 gram of gold. And so there's ways to make gold, silver, and precious metals very easy to use modern day currencies. The problem with those systems is that they have to live in centralized locations. So your gold has to sit in a vault, and then governments can come down and shut down that, confiscate it. Say you're doing money laundering, they can throw any kinds of accusations at you they want. It doesn't really matter. They're the ones with the guns. And if they want to shut you down, they will. And they've done that several times in the last decade with things like Liberty Reserve, e-gold. To a lesser extent, they put threats on goldmoney.com who are doing the same thing. And so it's very important to create something that is violence resistant because that makes governments unable to shut you down. The second challenge they had to have was to make something digital, ones and zeros, to have intrinsic value. And that's quite a challenge. It's certainly not impossible, but it's quite a challenge. For example, domain names. If you own yahoo.com, doesn't matter whether that site's running or not, it gets so much traffic, it's worth millions and millions of dollars. So that's something where just ones and zeros has value. Now, so it's certainly possible, but it's a challenge to do that with something that you brand new create. And the third thing is most people's experience with digital anything is that it's very easy to copy and paste. You can just create as much of it as you want. You can duplicate it, and in the currency world, this is called the double spend problem. If I have some unit of digital currency and I pay this person over here, how did they know that I didn't copy and paste it beforehand and I can pay 2 people with it? So it's known as the double spend problem. These three things, these are the 3 big challenges that made it very difficult to have a digital currency in the past. But Satoshi Nakamoto, the genius, came up with a way to solve all 3 of those problems with his creation of the blockchain and Bitcoin. Next slide, please. So what is Bitcoin? Well, it is the world's, actually it's a really, really important point to understand that Bitcoin is actually 2 things. And so often we get caught up in conversations where we only really focus on Bitcoin as the unit of account, as a currency, right? But it is actually 2 things and it has the same name, so it causes some confusion. But what it is, number one, it is the world's most efficient payment system. Nowhere else, anywhere in the world, can you transfer millions of dollars instantly pseudo anonymously to anywhere in the world without involving any intermediaries, without going through banks, without asking the government's permission, without the government being able to stop it. It's never, ever, ever happened before. And that payment system is what is the intrinsic value of Bitcoin. Yeah? Now, there's a whole bunch of words here. Let's go through them quickly because Bitcoin is a transparent, trustless, decentralized, peer-to-peer, frictionless, international, non-political, instant and free currency and payment network. Yeah? It is transparent and trustless because everything on the blockchain is available to see. So everyone in the world can see it in real time. And you literally watch the blockchain happen in real time, and it's just like watching money flowing around between Swiss bank accounts. You just see this numbered bank account went to this numbered bank account, and they transferred $100,000 or $10,000. And so it's completely transparent. You don't have to trust anybody. Once you have it in your account, it's there, and you're the only one who can control it. So therefore, it requires no trust. Therefore, it doesn't require any regulation to make it work because the code is the regulation. And it's something that everyone can trust and account for. If you understand math, there's some serious math in there. So if you understand math, you don't have to trust any human being. Decentralized and peer-to-peer, these are two really, really important distinctions for Bitcoin as opposed to all other attempts at currency, free market currency in the past. It's these two mechanisms, decentralization and peer-to-peer, that makes it resistant to violence. That's what makes it that governments cannot shut it down. They cannot protect their monopoly on issuing dollars and rupee and whatever else by just going and shutting you down, sending out men with guns, taking the gold out of the vault. That can't happen because of decentralization and peer-to-peer. Decentralization means there is millions of people all around the world contributing a little bit of computing power to run the network. And it's not, because it's relies on so many people, it's extremely robust because it's not dependent on anybody. There are no intermediary third parties, and it's just peer-to-peer, millions of connections all over the world. They're the two features that make it resistant to violence. Frictionless, international, non-political, instant, and free. Oh, I should point out, sorry, because it's transparent and trustless, that is what eliminated the copy and paste problem from the previous page. You can't do a double spend because it's transparent. All accounts can be seen, all units of account can be seen. The second thing that Bitcoin is that it's also the unit of account inside the payment system. You can't participate in the world's most efficient payment system unless you own Bitcoin. And this is where so often when introducing the topic of Bitcoin to people, you'll often get the question back, well, what's its intrinsic value? Gold's been money forever. Why should I trust Bitcoin? It's just ones and zeros. And I like this analogy the best. Owning Bitcoin is your exclusive VIP invitation to participating in this network. The total number of Bitcoin is limited to 21 million. However, it can be divisible to 8 decimal points, as we discovered before, that smallest unit being called Satoshi. Sorry, I breezed over this point. I'm just going to go back to it. I think of this analogy. Imagine if you want to play blackjack at the Bellagio Casino in Vegas, right? You can show up with all the money in the world, but unless you convert that money to Bellagio chips, you cannot participate in that really fun game. If you love blackjack at the Bellagio, the only way to participate in that game is to buy those chips. And that is the same. The only way to participate in this efficient network is to buy Bitcoin. And that's what gives it its intrinsic value. Slide, please. Benefits of adopter, I'll just rattle through this because I think you guys know most of them. Minimal or no fees for transactions compared to credit card processing. Forbes stated that just in 2014, $2.3 billion will be saved in merchant processing fees from the Bitcoin network that has already taken over a lot of our existing fiat transactions. There are no chargebacks ever. Certain industries love that, certain industries do not like that. But again, we love competition in currencies because that creates excellence, and we as consumers get to choose where we want to participate. For certain transactions, chargebacks are great. For some transactions, no chargebacks at all. 100% transparent accounting with infallible ledgers and eliminating all human error. That's very cool. Slide, please. Allows persons to send money anytime, anywhere, to anyone in the world. Any cell phone connected device turns into an instant payment vehicle. This is really cool. You go to these shops, they've got 2 or 3 little point of sale devices. These are like $500 each. The startup cost to accepting credit cards can be in the hundreds, if not thousands of dollars. Especially in Asia, where you've got lots of different payment systems, you need lots of different machines. Bitcoin solves all of that problem. Anybody with a smartphone can instantaneously become a receiver of Bitcoin. The good news is, by the way, a little side note outside of the Bitcoin world, I've heard quite reliably that either by the end of this year or early next year, $25 smartphones will be out. And so that's tremendously valuable to the foreign nations, developing world, because again, they just get catapulted into a 21st century payment system. And this, I think, is the most exciting aspect of it for Bitcoin. It is going to bring billions of people into a modern infrastructure. There are over 60 countries which credit card companies, Visa, MasterCard, PayPal, will not go near. Because of, on the issue, there was the chargeback issue, the fraud issue. Because there is no risk of fraud to the Bitcoin network, it makes it perfect for environments that are extremely prone to fraud, i.e. Nigeria's of the world and lots of those types of countries. Now, in these countries, they can have $25 smartphones or little laptops, Azuses for $300. They can create an eBay store. They have postal systems there. They can create their goods and sell them to anyone in the world, but nobody can send them money. They are locked out of the 21st century economy because they do not have access to Visa, MasterCard, PayPal, or any kind of reliable transaction. Bitcoin brings billions of people into the 21st century banking system. And so those people, within you'll watch in a decade or two, those people will just lift themselves up out of poverty because they can participate in that free market. Next slide, please. Yeah, I'll wind up on that. That was really, really fast. I'm sorry for that. What's the time? Okay, a little bit of time. I want to talk about some of the challenges that Bitcoin has. And I might, well, I'll see. I might get the whiteboard out. I might not. Preempting this, I want to say that I have a lot of my crypto wealth inside of Bitcoin. I'm very, very excited about Bitcoin. I'm not suggesting that Bitcoin is at the top and it's only going to go down, has troubles or anything like that. But in order to have this conversation, I do have to talk about some of the drawbacks about Bitcoin, some of the areas in which I think it can improve. All right. And so one of the big areas that I think it can improve is the efficiency of its security system. So let me just go a little bit technical, not too deep, just a little bit technical on how Bitcoin works technically, why it works that way, and what it's trying to achieve. In order to secure the network, right, Bitcoin pays what's called miners to secure the network. Every 10 minutes, they batch up the transactions. It's called a block. They add that block onto something called a blockchain. That blockchain is the entire history of all transactions for all time. Now, in order to pay miners to do this, they've got to buy big machines like this and run the electricity to do it. In order to do that, it costs them a lot of money, so why are they incentivized to do it? And the answer is, every time that a block is created, which is around about every 10 minutes, 25 new Bitcoins spring into existence, and they are given as a reward to one of the miners or mining pools who solves this mathematical problem and creates this block. So you've got a large number of people competing to what's called solve a block, and that's to create a block. Only one of them wins, and they get the whole 25 Bitcoin. Every 10 minutes this happens. So the more computing power you buy, the more rigs you buy, over the course of weeks and months, that kind of averages out, and everyone gets a little bit. Does that make sense? So let's do the math on that. 25 Bitcoins is created every 10 minutes at an average price of $500, because I haven't done the math for $400. At an average price of $500, that's $1.8 million is created in Bitcoin every single day. Wow. Over the course of the year, that is $650 million worth of Bitcoin for an average price of $500 per Bitcoin. But think about this. In 2014, Bitcoin will spend $650 million securing the network. That is like a mind-blowing figure. So 2/3 of $1 billion is spent by Bitcoin on securing the network. Right?
That's expensive.
That's expensive.
But how is this spent on securing the network?
What's that?
Electricity costs.
Cost of the hardware, the electricity, and the man hours.
Well, there's kind of two things going on there. So the question is, who pays for the $650 million to secure the network? And the answer is, you and I pay for it. The people who own Bitcoin pay for that security
through inflation. When those 25 Bitcoins are created every 10 minutes, that's inflation. That means the value of our Bitcoins just got lower. Now, we can kind of pay for it in one of two ways. It can either be paid for in a drop in the price, or it can be paid for in the price not rising as fast as it might otherwise have happened. Does that make sense? Inflation's a really tricky subject, and I'm sorry I've got like 10 minutes to talk about it, but like, inflation's a hard one to get. But when those coins are created, think of it as like, let's say you own shares in Apple, and Apple said, we're releasing 20 million new shares in stocks, right? That means you were diluted, and the value of your share just went down. So in the Bitcoin space, when those 25 coins are created, everybody who owns Bitcoin, right, they paid for it. They paid 650. Collectively, we all paid, and in proportion to how much Bitcoin we have, we paid $650 million to secure the network. Okay. Now let's think about that. Let's do some math on that. Let's take a hypothetical. Let's say the Bitcoin price ran up to $5,000 per coin. It's gone up one order of magnitude. Let's say it goes up one order of magnitude, right? Now it's no longer $650 million that we are collectively paying. Now we're paying $6.5 billion per year to secure the network. If it goes up two orders of magnitude, $65 billion. Let me say this another way. With today's price of $650 million, if $650 million does not of new money chasing Bitcoins does not come into the system, then if less than $650 million comes into the system trying to buy up Bitcoin, then the price will fall. More than $650 million, the price will go up. So every year, $650 million has to come in to keep the price stable.
What does that look like the next year when inflation does that little?
It's 10%.
So you're chasing, yes. You're chasing these things that become harder and harder to live in.
Yes. So let me just talk a little bit about that. With regards to those, I said 25 Bitcoin comes into existence every 10 minutes. That is true right now. That is not always going to be true. What happens approximately every 4 years, those rewards halve. So for the first 4 years, that reward used to be 50 Bitcoin. For the next 4 years, that every 10-minute reward is 25 Bitcoins. The year after that, 12.5. The year after that, whatever, after 12.5 is 6.25. Keeps halving, keeps halving, keeps halving. Right? We saw that pie chart before. And, there's already 60% or 70% of the networks or of Bitcoins have already been created. But but we're going to be still creating coins a century from now. That's why, because of that constant halving. So some very good news to look forward to. In the middle of 2016, those rewards halve from 25 Bitcoins to 12.5 Bitcoins. So that means the cost of securing the network, if the price were to stay still between now and then, the cost of securing the network will also halve. Typically what that means is people will bid up the price to double. So look forward for a doubling of the price in early 2016. Now, of course, there's lots of different factors that go into the price, lots and lots, right? There's lots of different reasons that people can bid up the price in between now and then. There's lots of different reasons that the price could be bid down between now and then. But I'm just saying with regards to this particular factor of the price, there's some very good news coming. So I hope that kind of makes sense for people. That's how much the Bitcoin network is at present. That's what it costs to run. You know who is paying it? We are paying it through the price not rising as fast as what it might otherwise be. If new coins were not being created, and somehow Bitcoin could work and do its magic without that, then the price of Bitcoin, I think, would be over $100,000 per Bitcoin already. It's that constant creation of Bitcoin that's keeping the price down somewhat. Now, what is Bitcoin trying to buy with that money? It's important to know that running the network is extremely inexpensive, right? Each miner that mines a block, every single miner is capable of mining the entire network every 10 minutes. Only one person does it successfully and gets the reward. And then next time it might be someone else, it might be the same person, but every single person does it. So for in the order of hundreds of thousands of dollars, you could actually run the entire Bitcoin network. What you were trying to purchase with that $650 million is decentralization. What we want is thousands of miners out there mining, right? Massive decentralization. And we have to pay the cost for them to do that, right? If they're not getting rewarded enough to pay for them to buy the rigs and turn the electricity on and do all that, they're not going to do it. So with our $650 million, what we're purchasing, what we're hoping to purchase, is decentralization. because that makes the system very, very resilient, right? So now, I want to talk about what's the value for money that Bitcoin holders are getting. How much decentralization are we getting for $650 million now? And the trend that is occurring in that also. So something to note is that back in the day, when Bitcoin was just being mined on just normal computers or whatever, it was very decentralized. All you needed to do was just run a program in the background of your computer, and it just mined coins. Anybody could do it. Now we see you have to spend thousands of dollars on specialized hardware, and then, only then can you mine coins, because it's no longer efficient. The electricity you'll burn running on a computer to try and mine Bitcoin, you'll never make up the money. So you just it's a net loss to do it. So now no one does that. In order to mine, you need to go and buy, in order to mine profitably, you need to go and buy rigs like this, right? So what that has done is that centralized the market somewhat. No longer are there millions of computers out there mining. Now there are thousands of mining rigs out there, really tens of thousands, hundreds of thousands of mining rigs out there.
It looks very Matrix.
And it does, doesn't it? And as we look into the future, what we can see is that trend towards centralization, trend towards centralization increasing. So what we see is that, we've got any pictures of it up there, is that now no longer can you just buy, in a pretty nice black case, can you buy a retail unit and stick it in the corner of your house and mine Bitcoins. Now, all that casing, that's expensive. Get rid of that. That's a waste. Now you just buy naked chips. You put them in a big array. There's one network engineer doing it. And so it's just becoming efficient to have big mining farms. And so what we'll see, I think, in the next year or two, we'll see like big, specific, purpose-built factories with water cooling and special electricity grids and maybe green energy and solar panels, that kind of stuff, trying to reduce the cost of mining. But what that does is centralizes mining. So I can see in the future what we might find is 20, 30, 50 different mining factories out there doing all the mining. And no longer is it worth our while to go and buy one of these machines and stick in this room. And so that we have a trend, it's pretty much accepted in the community, that we have a trend towards centralization. And that's very, very concerning. Again, this is not any kind of, I'm going to get back and reiterate my preempt at the beginning. I'm not saying the sky is falling and Bitcoin's in any kind of secure threat. I don't, in any way, shape, or form. What I'm saying is that trend is taking place, and when it comes to the efficiency, what are we getting? What's our value for money? We're spending $650 million on decentralization, and what we're going to end up with as Bitcoin scales is, unfortunately, probably 30, 40, 50 mining factories around the world. And that's not a lot of decentralization. And increases the likelihood of 51% attack, right? Correct.
So, be it a terrorist organization or a government or whatever, whoever wants to try and disrupt that, like if there are these big mining factories, if that does eventuate, a handful of bombs or whatever up would blow up half the network, and maybe you could send in an army on the other ones, and you take over 51% of the hashing, and all kinds of things take place when you get to centralization. So we want to avoid centralization. Centralization is not good, and Bitcoin is spending $650 million trying to get it. And we're seeing as the network scales, it's not working out as well as we would have liked. No one could have anticipated, maybe they could have, but with the advent of ASICs and things like that, that's what's driving this. If we're all doing it on computers, like laptops, like computers like this, awesome. We're infinitely decentralized, like the BitTorrent network, and life is great. So, but that's not what we have. So I think at some point what you'll see is that the crypto cat is out of the bag, right? Cryptocurrency is here. It's very, very exciting. The positives are tremendous. The efficiencies are amazing. And what we're going to see is, Satoshi's invention was the first one that was created, and it's software. So software can be updated, right? And so as long as you have the consensus of the community, it's entirely possible that the Bitcoin network can update to more efficient algorithms in the future. Now, this is something that I think that the altcoin space is really, really interesting, because you can go and launch a project. Let's say you've got a great idea. First of all, let's say I'm sitting here in this room and I'm trying to convince the Bitcoin network to, hey, let's change the algorithm to this more efficient algorithm. That will never ever happen. You'll never get the consensus of the community on Ethereum. It needs to be tested, it needs to be proven, it needs to be proved for years, I would suggest. And only then would you have an entire community to say, yes, let's change the Bitcoin core protocol in some way to take a more efficient algorithm, right? So I think the altcoin space is really, really interesting for this. Because what you can do is you can launch a program, and there's lots of different ideas about how you can make things more efficient. They launch it, and you sit and watch it. And it's like anything, 90% of them are going to fail. And that's not going to harm the Bitcoin network at all. But some of them are going to succeed. Some of them are going to be here for 2-3 years. Some of them are going to be vastly more efficient. And the Bitcoin network, you go, that's awesome. We're spending hundreds of millions of dollars for a little bit of decentralization. They're getting lots of decentralization for a very small amount of money. Let's adopt that, and we. Because Bitcoin has the network effects, hundreds of millions of dollars of VC money. It's the 400-pound gorilla. Trying to displace it is going to be very, very hard.
So you think Bitcoin will adapt rather than an altcoin rise up and supplant it?
It's an interesting debate. It's a really, really interesting debate. Getting consensus from the Bitcoin community is going to be hard.
Because I think the stakeholders, being the miners, they're not interested in having a more efficient or a different algorithm. And they're the ones that control they're the stakeholders. They control the voting on the network.
They're not the stakeholders, but they do control the voting on the network.
Well,
so miners are not stakeholders. So stakeholders are the people who own Bitcoin. Miners are the ones who buy the rigs and run the network. Now, but with regards to in the current system, the miners have a hell of a lot of control. Because whatever they choose to mine, whatever blockchain they choose to mine, that's going to remain the longest, and that's kind of the core definition of the truth in Bitcoin. Whatever is the longest chain, whatever gets the most amount of Bitcoin mining power, that's considered the truth. That's the real ledger that we all work from.
But if the Bitcoin devs release a new version and the miners, so the Bitcoin devs, hey, we've created this thing where you don't need to mine anymore. Now it's totally efficient, and we can do it for free. The reason why I call the miners the stakeholders is they're the people that actually have to adopt the new client. They have to adopt the new algorithms in order for the network to change. And they have no interest in adopting an energy-efficient algorithm, because if they do, then they're putting themselves out of business, and all their capital and time investment becomes worthless. So Bitcoin is stuck in a catch-22 there. I think.
We do. With regards to the vast majority of these decisions, the mining group has a hell of a lot of power for the reasons that everything you're saying is absolutely true. But and I think this is where the merchants are the BitPays and the Coinbases of the world, if they got together with the consensus of the stakeholders and said, let's hard fork and change the algorithm, and sort of it's going to be bad for miners, but we can protect ourselves from that. If there was a way to do that, then I think that actually you find the payment processes have a lot more voting power. But yes, it will be against the interests of the miners. This is all kind of the politics of Bitcoin. This is the really fun stuff to talk about, right? This is like, well, where's it going to be in 2, 3, 4 years? And I think there's another point here. We're not just talking about lining our pockets and making money, although that's not a terrible idea. There's a really, really good reason why we want the Bitcoin price to explode. And that is this. If Bitcoin is to fulfill its promise as like radically changing the world, right, it needs to take over trillions of dollars of transactions that are currently taking place in the fiat world. Now, you can't do that with a $6 billion market cap. There's not enough money to go around to be in all those transactions simultaneously. Now, we have a hard limit of 21 million coins. The market cap is the price of Bitcoin times the number of coins. The only way we can get that market cap up for Bitcoin to fulfill its promise is if the price goes through the roof. Or, if that fails to happen, we will be in a situation where Bitcoin will leave room for other cryptocurrencies to come in and fulfill the shortcoming that it has. So as a community, we're very, very incentivized to raise that Bitcoin price, raise that Bitcoin market cap, and again, the money will be slushing around for the community to use it. Otherwise, it won't be. The volume's just not there. Any questions like at this point?
One question I can't shake is here. All of these are translated to US dollars.
Yes.
In terms of where paying to secure the network. What's the one? Scotland or whatever. The one that says, "Oh, we might go to this as a national currency."
Made safe. You talking about?
Is it?
They're the one that came out of Scotland.
Yeah. Is it?
You're right. You're talking about there's a country talking about moving to Bitcoin as a national currency.
Yeah.
I haven't heard of it, but let's say it does.
I forget.
It was Scotland. There was a lot of articles going around when Scotland was doing the referendum. England was saying, if you want to become independent, you're not allowed to stay on the pound standard, and then they're limited to either the euro, which is a big mess, or create their own currency, which is immediately be weak, or join another international currency, which was Bitcoin. But it was all quite theoretical. I don't think there was any real. There wasn't much political backing for the movement. Yeah.
Because all I'm saying is we're defining these concrete fiat assets essentially of dollars. Right? Yes. And that's a huge philosophical.
You're saying once we shift to a closed circuit in Bitcoin, we're not in and out of fiat as we have to be, then that will change. And again, that's not quite true. Now, what is true is when when the block rewards halve, then what the significance of this inflation does go down. And then what we find is, let's just go forward a century, right? And now Bitcoin is running exclusively on transaction fees, and there is no inflation. We still have the instance of how much centralization are we getting for the money spent that goes to the miners to do that. And so again, we come back to this concept of efficiency. It's how much decentralization do you get for money spent? And whether you denominate it in Bitcoin or dollars, the amount you are the amount of money you spend on securing the network is still the same, just denominated in two different.
Except it's not exactly the same because one is violence and one's not.
Yeah, but the cost to the stakeholders is the same. It's just measured in two different ways. The actual financial cost. Now, I'm looking at the time here, and last time I was here, Gary was like very specific that he likes to keep it to an hour and 7 o'clock.
Yeah.
So is it time to shut the hell up now?
Yeah. Sorry.
Okay, no, that's not nice.
But we can, yeah.
Yeah, I'm happy to stay for as long as possible, but I know you like to keep it to 7, so I'll sit down and shut up. Thank you very much, everybody.
Thank you, Max.
All right.
Alright.
So, hey, do you want to plug your Twitter handle, or if there's anyone out there that wants to follow?
I'm hopeless with Twitter, but what you can do is just the YouTube channel is probably the best. Just youtube.com/Success Council.
There you go. All right. Thanks, Max.
Yeah, keep uploading the videos.
When it shuts, I'll enter. Let them close it, and then I'll enter.
Okay. All right. Any more announcements we got here? Announcements?
No.
Happy Equinox.
Happy Equinox.
Yay!
And we're gonna
have after party tonight at Delicious Onion. They say that they already accepted Bitcoin for payment, and it's very delicious places for burgers and vegan burgers and
live music.
Live music, exactly. And yeah, you guys are welcome to join to mingle more and talk about Bitcoin if you guys want to. Yeah. Are you guys come in?
Where is this, just now?
Yeah, it's right there.
Yeah, we have to have dinner somewhere.
Yeah. All right. Well, I'll see you guys there. Thank you for joining us, guys out there. Thank you, Peter, for your contribution. Love you guys, and I'll see you next week.
And get well, Gary. Get well soon.
Yes, Gary, get well soon.
Gary can hear us. Hello, Gary.
Oh. Talk sexy, baby. All right, everybody. Shall we?
Yeah.
All right. See you next week.
Didn't know it.